Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me remotely is Phil Mackintosh. He's our chief economist at Nasdaq to review how policymakers and investors are starting to model out the global economic impact of the coronavirus as the race is on to mitigate the spread of the virus and provide stability to the markets, consumers, and the economy. U.S. weekly jobless claims doubled to 6.6 million due to COVID-19. Phil, the obvious question is, has the market priced that in? Before we get to that, let's get an update on case numbers and the trajectory of the virus.
Yeah, so I guess overnight the news was probably more of the same in terms of case numbers. We're now over 950,000 cases on the way to 1 million. But there's a few places where the cases or the new cases are starting to slow. Even in the US, we've sort of seen a slowing in the curve. Yesterday wasn't as bad as the day before. Italy looks like it's well past its peak now. So it's starting to join some of the other countries like Korea and China that have really got this under control. So there is some good news for people that have been under lockdown for 3 weeks, that you can start to get death rates under control and actually start to see that start to fall as well.
Yeah, that's certainly encouraging. And if we go to our second slide here, the obvious question of the day is, are jobless claims priced in 6.648 million versus consensus of 3.1? It's a pretty big number. It's shocking at first blush.
Yeah. Although, I mean, even the fact that it was 3.1 means people had some pretty high expectations. It's normally around a 200,000 person number. So clearly there's a lot of information out there about companies furloughing workers, letting workers go. In the press, there's been stories about some of the retailers letting workers go, at least on unpaid leave. So there's plenty of press out there about hundreds of thousands of workers that were let go. There's in the data that we're showing today, you can see the estimates for the number of hours worked is more than 50%. So it's pretty clear that the economy is underemployed and that there's a lot of people that have been at least put on temporary leave. So the number is expected to be large. It actually beats the average expected number pretty significantly, didn't it? Coming in more than double last week's number. So combined now in the last 2 weeks, we've had 10 million odd new people apply for employment. But it's expected to be short term. I've seen statistics that say that translates to a 10% unemployment rate. But the reality is, if this is a 3-month deal and we're back to work, the jobs should still mostly be there and people will start spending again. And that's the hope. That's what we found in the data in 1918 with the Spanish flu. Once things started to recover, people got back to work pretty quickly.
Yeah, well, I'm certainly looking forward to it and spending that pent-up demand. Let's go to our next slide here. And saving U.S. oil, that is the other big story in the market.
Yeah, demand, which is what we're showing in this chart, has been crushed, really. I mean, the aeroplane traffic is down 90-odd%. A lot of people aren't even driving as much as normal. So there's a lot of people using less energy generally, using a lot less oil. So the demand side of oil has gone, which is hurting the price. But then, of course, we've had the price war between Saudi Arabia and Russia, which is an oversupply problem. It's got so bad, there's actually reports now that Saudi Arabia is looking for tanker ships to put the oil into to store it. So you know that there's a big imbalance between the supply and demand of oil. We've got WTI was priced at about $8. It's up 10% today on the back of the fact that the White House and Russia and Saudi are starting about stopping some of this craziness and just letting oil to a better level that's more manageable for the oil industry and obviously better for the economy as a whole, just to have healthier companies and more normal prices.
All right, and as we like to do, we like to finish on a positive note with our last slide here, and this actually shows how the curve is starting to flatten in areas that have gotten a handle on COVID-19.
Yeah, so this is what we started talking about earlier on. It's some pretty good data. So the stars on this chart show when the lockdown started to happen, and that's really what's interesting. So Italy came into lockdown relatively late in its growth cycle, which was why it was in the press so much. But it's now starting to see, this is new deaths every day, that's starting to flatten out. And hopefully they can all get it to tilt over and start to come down. So Spain has definitely started to flatten as well. And they were two of the countries that were highlighted just a week and a half ago as having sort of runaway problems with COVID. Hopefully the US, we've been in lockdown now for a week or a bit more in some states. starts to see the curve do the same thing. And the idea is we all end up in a place like Korea and China with less than 10 deaths a day and hopefully less than 50 cases a day. And we can isolate those people and the rest of us can get back to work safely.
Yes, that certainly is the hope. Phil, as always, thanks so much for joining me.
You're welcome. Thanks.
All right. And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.